Right, right. So you've got that. You've got the fact that there's no $5 renter tax on an ETF.
Yeah.
You've got the fact that you can have certain structures set up, legal and tax efficient structures set up that will probably be more easier with an ETF than actually the quote unquote physical Bitcoin.
Right.
So yeah, those are the advantages to me.
I think another one on the ETF side,
Yeah.
and Costa's got a pretty good. I don't know if you signed up for this level, but the last level of Costa has all this kind of estate planning stuff, right?
Yeah.
Which is great for me. Like I needed something that I can pass
What are you worried
on.
about that for? How old are you? Look at you, still got hair. What are we talking about? I should be signing up for that.
They give you a discount. Bald guys get a discount.
So yeah, like the inheritance planning stuff is cool. I agree. That's eventually I will have to progress onto that if I'm.
Yeah. So I think on the disadvantage, one of the things is jurisdiction, right? You never know when it's going to be more difficult to get. I think having a Casa type thing, if you have to move somewhere or you have to leave your country or whatever, big advantage, right? So if you're mobile, I kind of like the idea of actually being a little closer to the actual coins, right?
Yeah.
I think that's a cool thing. I think just sort of.
Are you planning on leaving the United States anytime soon?
No.
Yeah. So that's.
I'm not. It's a different thing for me. I'm not moving around. I'm here. But if I was in Ukraine,
They probably want the Casa set up, right?
you might want the Casa set up. You know what I mean?
Yeah.
You never know. Like you're in Argentina, they might pass a wealth tax law or something, right? You may you may be one. You may have to get out of Dodge in a hurry, right?
Yeah.
If you need to get out of Dodge in a hurry, nothing like kind of your own custody. That's the best. And a lot of people, I think, are in that. Let's say you've got some money. You don't have to have tons of money, but you're in Africa, right?
Yeah.
Kind of unstable, right? There's countries that they can go, Congo, whatever, some mercenary from, Wagner Group takes power, all of a sudden your bank's closed. You have stuff in your bank. Okay, that's no longer your money in your bank. You know what I mean?
Yeah.
So I think that's kind of that's fundamentally the reason why Bitcoin's great, because it is self-sovereign money, right? That you can take anywhere. It's you can leave the country in 24 hours. You can leave South America in 24 hours and go to Iceland.
Yeah.
And you can survive, right?
Yeah.
Not a problem, right? And I think that optionality is worth a lot, right? That optionality.
Even if we weren't talking about like the need to get out of Dodge really quickly, like even if you wanted like the speed of capital to move really
Right.
quickly for whatever reason, let's say you were doing business here, there, and everywhere.
Yeah.
I think there's advantage in having some self-custody Bitcoin, because you can send it. You can basically start causing problems wherever you want to cause them, right? You can send
Right.
it, and technically within 10 minutes, your capital and your energy can be in place, affecting whichever direction you want it to move in.
Right.
I think that's a huge advantage. I think a lot of people. It's funny, the conversation that I hear about the privacy and the I don't want the government to do this and this, that, and the other, mainly comes from people who don't own too much Bitcoin.
Mm-hmm.
Like this is not a conversation that people with more than 10 coins are having, generally in my experience, right?
Yeah.
And so I think everyone's got to think about their own needs. I think that people with less money typically are more worried about
Right.
what's going on around them.
Right.
They're definitely more susceptible to the doom and gloom boomer bullshit that I've
Right.
seen all over the place. And that's one of the things I love about, well, I don't know, maybe I should create a new name, the happy boomers, is that happy boomers, like, just want to live life, live a good life, live comfortably. And especially if you're in America, which is where like 80% of my audience is, you're in the most secure capital markets in the world.
Right.
You're not in some middle of Africa or middle of Asia or middle of South America place. So
Well, one of the things I posted about, which on the same topic, is that there's all this kind of, again, doom and gloom, like stuff on the deficit, and it's going to blow up, and and I remember hearing that kind of stuff back in 1987. You know what I mean? Literally, I remember, Blackstone wrote this. Pete Peterson from Blackstone wrote this book about the impending debt crisis. We're all going to die. Of course, the debt quadrupled since then. Not a problem. But like we have a way in the kind of mature financial world of kind of going through this stuff. Like I'd have to say, if my best case, my most probable case is 10 years from now, it's not going to be Mad Max Beyond Thunderdome, and it's not going to be 30% inflation or hyperinflation or the Weimar Republic inflation. We're not going to be taking dollars in wheelbarrows. I don't think America is going to become the next Argentina. Now, a lot of Bitcoiners will be like, yeah, but Argentina used to be rich, and it's like, America is a little different than that, right?
Slightly different.
Slightly different.
You've got a slightly bigger military, from what I hear.
Mm-hmm. And look, the system does kind of work. So, if I had to bet, I would say, headline inflation it may go up a touch, but it's not going to go up it's not going to be in the double digits for that long if it even gets there again, And right now we're getting. So I just think that's not the reason to be in Bitcoin, right? I don't think you need to be in Bitcoin for that, right? I think a good reason to be in Bitcoin is it's a better version of gold, right? And gold sort of fulfilled the need, right, for self-sovereign money that you can take with you and all the same advantages. And now we have a better version. It's called Bitcoin. It's better than gold.
That's the reach that people are having, and I think that narrative will change in the next 5 years. So this will be better than real estate.
I agree with that eventually, right? I totally agree. We got to get to the point, because there's so many real estate investors. And one thing that I loved about your podcast, you really touched on that really early. Back in the Clubhouse days, you were saying that, right?
Yeah.
You were like, look, this is the property market stuff. That's going to be a longer cycle, right? Because we got to get to those guys actually starting selling their properties, and like your parents, right? We got to get to your parents thinking, you know what? Maybe I could just take this digital thing and put it in my brokerage. But this is step one of that, right? But I do think.
Say something. I had a conversation with my parents after this ETF got approved for the second.
What did they say?
In 2 days, and they literally said, we don't think that we would ever need to think about buying another property ever again.
Really?
Because they finally understand it, right? They finally see what it was about the ETF. Again, their son can be a fucking British Hodl, but they still need Larry Fink to tell them that this is a good idea, right?
Right.
This is what it is. So I think they saw that it got approved, and now you've got all these institutions behind it. CNBC's talking about it, Bloomberg's talking about it, and it suddenly, everything that I told them that would happen in 2020 suddenly just all of a sudden became true, right? And if I'm experiencing that with my parents,
right,
I can't even imagine what so many young Bitcoiners that have been trying to bang their parents' heads against the wall for the last 4 years have just experienced now in the next, today in the next few weeks.
Definitely.
I think that property narrative is going to shift a lot faster. The good thing about real estate is that a lot of these real estate gurus have managed to get people who want to make money into real estate. And people that want to make money, I can trust people that want to make money because they're very rational people, right? People that are emotionally in love with an asset like gold, I can't really trust that person. Because no matter what I tell you, you're still going to want to hug your gold bricks. So, the rationality of real estate investors, I think, is going to help them make the pivot to Bitcoin. And remember, as soon as options get activated on these ETF products, Bitcoin is now a cash flow generating asset.
Right.
You can sell covered calls against it.
You can start, absolutely, right. And those covered calls are going to be, by the way, very, very profitable, because when you're dealing with 40, 50 vols, or maybe 80 vol, or where it's going to be, right? You're going to get an enormous yield if you're willing to give up your long tail, your long tail result. So,
well, even if you don't give up your long tail result, and you can still generate, an extra 15 or 20% a year without giving up the long side of it, like, what are we talking about? This is nuts. This is nuts.
Well, and also, look, this real estate guys, the way I saw it is, we had this huge boom in real estate. All my friends they were all in stocks, and then after the dot-com crash, everybody kind of got into real estate, right? Yep. And everybody and their brother and their, obviously it's like The Big Short, right? But everybody was like renovating houses and flipping them and all that, right? And then we saw this other movement after 2010 about people they didn't trust the everything bubble, right? So they're like, yeah, I don't trust Amazon at 70 PE. I don't trust it. You know what I mean? No, they should have trusted it back in 2010, but they didn't, right? Yeah. So there's all this money that was just like, I don't trust stocks. I want something tangible. I want some income producing thing. And guess what happened last year? They got their asses handed to them, right?
I said last year, I was like, the value investing crowd, the value bros, get maybe about a good 18 months every 15 years.
Yeah.
Right? So you had all these people talking about value investing is back, and it was like, it was clear to see this is a response to the credit cycle, and as soon as that turns, you're going to get screwed again.
Right.
The interesting things that I wanted to actually ask you about, because you mentioned Tom Lee from FundSpread.
Yeah.
And what was fascinating was his presentation in 2018. It was on YouTube. I can't remember which conference it was at. It was one of the first 3 to 5 presentations I ever watched about Bitcoin after getting orange pilled, reading the Bitcoin Standard. What was it that did it for you?
Well, so I went to this conference that was put on by Chance Barnett, and he started this Bitcoin-friendly bank in Bermuda called Jewel Bank, right? And he invited me and a bunch of other people who were in, at that point, crypto, right? I built a wallet, so I knew a lot of stuff about crypto. And so I went to this presentation. We all hung out for 3 days, and we're talking mainly about really high general asset allocation, Bitcoin, et cetera, right? And he basically had his entire pitch was based on generational. He said
that's exactly what did it for me.
Yeah, so he was like, look, it's all about asset class for a generation, right? And he's like, look, you look at boomers, they were only interested in large cap tech stocks, large cap stocks, the S&P 500, right? Then you look at Gen X, the next generation. They were infatuated with tech stocks, right? Because that's the world that they were growing up. They felt like, you know what, these boomers, ExxonMobil, totally uninteresting. I don't want to own that thing. Johnson & Johnson, no interest. But, can I own Google? Yeah, that's great. I love Google. I'm cool. I own tech stocks. And then the next generation, right, which is millennials, right? That's by far the bigger generation, much bigger than the Gen X in terms of size. And the values of millennials are very different. Yeah. Because millennials, their number one value is freedom, right? They want freedom to move around. They don't want to talk to a broker. And, they literally, he was citing a poll that people were asked, who would you prefer to talk to? Where would you prefer to go? To your banker or to the dentist? And people are like, I'll choose the dentist, So the idea of coming to your banker, sitting down and, let me give you the stagecoach checking. Let me look in your account. That's very, very antithetical to most millennials. So they really want to do it themselves. They want to have it on their phones, right? They want to have custody themselves. They do not want to have any intermediary. And they don't want to be tied down with a 30-year mortgage, right? They really don't, So, kind of my generation, we were all like big houses, right? Yeah. You need a big house, right? Because big house is success. Yeah. And big house goes up in value, right? So that was the thinking, right? But millennials, they don't really want that big house in Beverly Hills anymore. That's actually kind of like a negative, right? So what they want is an apartment that they rent, and then, right, and then they can move on.
Yeah,
right?
It was a Prius, now it's a Tesla.
Right, now it's a Tesla, but they don't want commitments. They're commitment phobic, yeah. And they love this idea of this digital asset. It fits the lifestyle, right? So I was just like, oh my god, that is so. Like, you just convinced me that, and I wasn't just one presentation. I hung out with him, I talked to him a lot, and and Bitcoin was at 5,000, but I was like, I gotta take a jump here, Like,
what year was this?
2019, May of 2019, and it was, we just started kind of working our way back. 2018 was just like Craig Wright and all this stuff, right? And they're like, is Bitcoin going to survive? What Bitcoin? Is it going to be Bitcoin Cash? We don't know, right? And it was just a disaster. And then 2019, we're just sort of poking our hole. And he made this really great quote. He said, listen, Fred, the only thing that matters, if you're on Wall Street, if this thing's gone 80% down, it's dead man walking. I'm not interested in it. I said, well, what would it take? He goes, you have to get back to your all-time high. Yeah. That's it, right? So I do think he's right that when we get back to an all-time high, when we cross that thing, that's when the booster rockets get up. That's when Wall Street is going to be like, oh, what did you say? All-time high Bitcoin? Larry Fink approved it? It's in my brokerage account? Yeah. Boom, press buy, right? So that's what I think. I think we've got now the booster rockets have been strapped on. We haven't ignited them yet. But I think we get to an all-time high, and it's almost unlimited how much money can now flow into this stuff, right? It can flow. It doesn't mean it will, but if we get to all-time highs, it can. And all this money in 2020, 2021 was just, people were just looking on the sidelines going, that's just funny money.
It's nothing. When you actually look at it, it's like $25-30 billion in the entire last cycle peak. It's like, this is a drop in.
Well, and a lot of that $25-30 billion, let's be honest, it went into this idea of making 10% at Celsius, right? Or 20% at Terra Luna, right?
Or doing this GBTC arb trade that everyone.
But I mean, forget even, the GBTC arb trade, right? But like, a lot of it was not even based on the idea of investing in Bitcoin, right? It was stable coins with yield. That was like, I can sell that product to people because interest rates are low, right? So I think we're going into something completely different, right? Where we're now going, okay, we got this new asset. It's not tied to yield at all. It's working on its own merits. And so I think we're in a different world, and I think we could get 100 billion, no problem this cycle. Maybe 200 billion. You know what I mean? No problem this cycle.
Well, if that happens, then you're looking at a multi-million-dollar Bitcoin price.
I think we're going to get. As I said, so this is my view. I think we're going to have. It may take a little bit of time to go there. Once we get to all-time highs, and the halving obviously is going to help, right? But once we get to that point, then the booster rockets come in. Then people the sheer greed of people just saying, "Oh wow, IBIT was the top ETF, top volume."
Can you imagine the prospectus from BlackRock next year? What's the number one best performing ETF on BlackRock? Bitcoin. What's the number one best performing ETF with Fidelity? Bitcoin.
Well, it doesn't even need a prospectus. You just go to their choices. They have menus, and you just go sort by top performing. Right now it's like some Indian tech fund in Japan, right? Yeah. Now, in 3 months it's going to be IBIT, Bitcoin. So now people are going to be like, what, am I an idiot for not investing in this class? Look, they were emerging markets. One of my friends was on the cover of Barron's, Guy Elliott, and he ran the Croesus Emerging Markets Fund. At about $1 billion under management in 2000, in the early 2000s, right? Kind of got, once we hit not before then. So he got hit in 1998 with Russia, the first Russia crisis, right? Russia went down 95%, right? So emerging markets got slammed, right? But if you wanted to invest in emerging markets before 2000, you'd have to go to a guy like my friend, and you'd give him money and he would figure out how to put the money in crazy places like Uzbekistan, you know what I mean? Yeah. But now you have the emerging markets fund, right? You have hundreds of these funds, ETFs. So you click, Uzbekistan fund, boom, you want the Uzbekistan tech fund or the Uzbekistan mid-cap fund? Your choice, right? So, I guarantee none of these people buying that thing have ever been to Uzbekistan, or couldn't even place it on a map, right? But they're buying. Well, it's been around. It's a thing. It's in the menu. And at some point, I think this year and next year, same's going to happen for Bitcoin. These people are just going to, they're not going to read the white paper. They're going to read the Bitcoin standard. They're not going to read anything. They're just going to look at performance and they're just going to go, that's it. That's all I need to know. So I think we're going to get this blowout thing. And I think, I've lived through enough of these bull markets, right? So I'd say the one that I really remember the most was the Japan bull market, in 1990. And it was insane, I'd go to Japan, it was just insane. These things they were just trading these stocks are numbered, right? Like number 78231, it'd be Tokyo Milk. And people would be like, yeah, Tokyo Milk's worth 10 billion, What do they do? It doesn't matter. It's milk. You drink milk, it's in Tokyo Milk, great, And so people just got completely enamored in the Japanese market and it crashed, right? Then we got people completely enamored in .com stocks. It crashed, right? So, and these crashes can be very long, right? They can be, once everybody really loves the asset and the crashes, it can go down for 10 years. That's one thing I've learned. So I think likely, it's not going to happen in a question of cycles, but I think my view is that this thing could be the end of the 4-year cycle. I think we could have a 6-year bull market, take us to 1 million, take us to 2 million, and then bam. Now that everybody's completely comfortable with the asset, bam, it crashes. And now everybody's like, well, screw that. I need to go into something more reasonable like AI,